As you may remember from the last video, a zero-line crossover will often be less decisive when price and the awesome oscillator are in a defined range. That's why this bullish zero-line crossover is less significant. In contrast, when price is reversing and crosses over defined resistance, strong bullish momentum is going to have a defined upward slope above zero and continuing to rise with consecutive green bars. After that, the uptrend is in full force with bars remaining well above zero for the majority of the time. And after those minor dips under zero, they quickly cross back above zero into positive territory for a positive zero-line crossover in more of a continuation rather than reversal context. Now with this negative zero-line crossover, there wasn't much success to drive down lower since price did not break below these boundaries to complete a reversal range, and the bars on the awesome oscillator were small and only remained below zero for a very short time. Now with price beginning to reverse down to a defined support range, there is a bearish zero-line crossover, which tells us there's strong momentum behind this selling. But this natural delay at the support range is decreasing bearish momentum, as we can see with the green bars, which still remain under zero. Fortunately, from a bearish perspective, there is a return of red bars and eventually a decisive close under this support range. It's not unusual for these kinds of situations where there's a strong zero-line crossover, either bullish or in this case bearish, that start off strong but quickly get halted as momentum begins to decline for a period. That's usually when price falls into a defined range, and the oscillator could even return back above zero for a short time, but this will usually be with small bars, in the context of a larger downtrend that will eventually continue lower, if there is a break of defined support accompanied by another row of red bars closing lower. Here are some more examples of weak zero-line crossovers in a bearish context. We see those familiar three characteristics where there's a defined range with small bars which only go under zero for a short period. This is a case of moderate bearish momentum. There is a decent drop in price and values on the oscillator go under zero. Bars aren't small, but they aren't exceedingly large. What is important is they continue to go slightly lower, and there are at least 4 in a row. And even though green bars appear, values stay under zero and price steadily goes lower. All these features together are commonly found in a sustainable downtrend such as this one.